Hey, good morning, everyone. How are you? Happy Wednesday. Happy hump day. Okay, about halfway through today, it'll just be downhill till the weekend. So, um, something to look forward to if you guys like your weekends. Me, I think I'm going fishing Saturday. That's the plan anyway. We'll see. We'll see. All right, today, woo, doggy, Mr. Powell. We're going to get some Fed information today. So today could be a little wacky, to tell you the truth. Um, there was a time when traders just absolutely loved it when the Feds had their meetings and their announcements and everything, because there was a time when traders just knew that the Feds were going to feed the market. Um, Man, we just couldn't wait. Buy all over the place. Nowadays, it's a little different. The Feds aren't feeding the market. They're trying to starve the market, um, or they're trying to take away what they have fed it. So the market sometimes doesn't like that. The market is like a little child, and um, if you give your child an allowance for cleaning the room, as an example, and then one day maybe the child quits cleaning the room and you take the allowance away, well, the child's going to throw a temper tantrum. It's just the way it is. The market is a child. So what's happening is the allowance is being taken away and the market could throw a temper tantrum. So I don't know. I've learned in parenting, you have to stay calm, let them get their temper tantrum out of their way, and then deal with it. But trying to deal with them when they're screaming and yelling, um, well, heck, that even goes for an adult, right? You can't deal with adults when they're screaming and yelling. You have to let them calm down. So anyway, today we could see a stagnant market, until some numbers come out. We could see a very volatile market. It's really hard to predict what exactly the market is going to do. So this is a really good day to kind of sit back and relax. It's a good day to put together a watch list. All the charts we're going to look at here are to the long side. During the day, I will be putting on watch list charts, and I will post here in the room and on the app. That's going to be my goal for the day, is put together short watch list, as they start rolling up on the scanner. Um, we've had a pretty good couple of days here in the market with, what was it, Monday, we're up, Tuesday, we're up, and it looks like we're opening up relatively well for today. The futures are up a little bit, but all the price action in the world, it doesn't make for some bullish activity. And we're still under the T line, which I use this. This is like this is my lifeline here, the T line. It has been for years. It still is, and I can honestly say that it will always be that way. So when price is under the T line, that is just a good time not to be long or overly long. It is a great place to maybe shop for charts. And then when you put the T line under another moving average, that's just simply putting a trend together. I use the red dots here. That's a 17 EMA. And when you put those two together, you're just simply putting two trends together. You put two moving averages together, it can be going down, it can be going choppy sideways, or it can be going up. In our case right now, they are simply going down. And then you stack it underneath the 50-period moving average. You've got some bearish stuff going on here. I pride myself on not paying attention to news. I don't get political. I don't care what the politics are when it comes to trading. I don't care about anything other than the charts. And if we just read the charts, it tells us everything. Um, the 50 period moving under the 200 period moving average. This is just absolutely 100% bearish. There is not a bullish ounce in this chart. This is something to remember. Now, so why do I have some bullish charts here? Well, because you're still going to have bullish moves in a down market. There's also the chance of some kind of relief rally working. You want charts for both sides is what you want. And energy, I have a lot of energy on here. I didn't realize it was so much till I was done. Lot of energy. But if that's working, it's working. So let's take a look at that. All right. So main thing today, let's be a little bit careful, a little bit cautious. Here's another thing too is, so say 2 o'clock rolls around, there's some Fed information comes out. Don't chase the first little poke in the market. You know, don't, if the market starts to tank, don't chase that first little poke. If the market starts to move up, don't chase that first little poke up. In fact, let it poke around for a good hour. In fact, maybe let it poke around until tomorrow, because the market, it just jerks you back and forth and it'll kill you. Anyway, all right, let's take a look at some things here. So Clorox here, I think, is a nice chart. Clorox is a rounded bottom breakout. There are some new people in the room here. I'll be happy to talk about this today. Just somebody has to remind me, okay? And I can explain a little bit more about the rounded bottom breakout. Here we've got a nice trend. We'll just use this color. Here we have a nice trend up, and you can see it's pulled back right to the 50 period moving average. By the way, it was a rounded bottom breakout right here. It's been a rounded bottom breakout this entire time from this point here. Just because it's a rounded bottom breakout doesn't mean it's just a blind buy. We want to wait for setups. So here we are back testing the 50 period moving average. We have a bullish morning star signal. Yesterday we got up here pretty high. Here we've pulled back, and it looks like we're opening up on an inside day. So this to me is just a buy area right in there. And then you can set your stop in how you set stops. We can talk about stops a little bit later today. Target wise, with the rounded bottom breakout, about the easiest thing in the world. The dotted deuce is always the target. The 200 period moving average is always the direction that we would like it to run. And we would like it to get there, but it doesn't mean that price is going to actually get there. I also see a target up here about 169 with a breakout of that 200 period moving average. XLE, I'm looking at 81, 83, 86, 89 up here as possible targets. Now this may be too high to buy, so why is it on the watch list? As far as I'm concerned, the best stocks for a bullish watch list, and bearish would be the same thing, just opposite. When you have a chart that starts down here and you look at chart and it comes all the way up here, and there you go. So now you tell yourself, man, you know, you run across this chart and you tell yourself, that's the chart I wish I was in. I wish I would have bought this chart down here. This is the chart you want on your watch list. You didn't, I hear a lot of people, man, I missed this. No, you didn't miss anything. Okay, it's like this little run right here. I hear it all the time. Man, I wish I would have bought it right here. This, after you say that, that's great. Okay, now let's move forward. That is the chart you want on your watch list. Why? Because that's a trend. And now what we're going to wait for is a little bit of consolidation, a little bit of pullback maybe, or how about a breakout and buy up here? Here's something about charts. A trend will stay a trend until it's no longer a trend. So as long as it's a trend, it's a trade. Nope, that's not a bear flag because it started to turn up. This is setting up for a bullish J hook. Bullish J hook. Starbucks. So Starbucks reported, and it reported good. So I think it should be something we have on our watch list. Now, personally, I'm not particularly interested in buying it till it gets up over that 50 period moving average. But the reality is, here we have a long-legged doji down here. We have a bullish candle right here. So how about just put the buy box in like this? I mean, don't we have that trend up? You know, somebody that might see, well, here's Starbucks now. Somebody says, okay, man, I wish I would have bought that doji down there. That's the chart you want on your watch list, because right now, this is, whoops, this is the trend. So all we're waiting for now is consolidation, whether it's here, whether it's here, whether it's here. We can't predict where it's going to be. What we want are those trends where the bulls are in charge. When bulls are in charge, they always stop and take a rest. They always have to feed. So when they rest, when they feed, that's when we look to take advantage. So I'm not interested in buying it up here. However, I would be very interested in buying it maybe to the right. I'm more interested in buying it when it proves it can get through that 50 period moving average. And what'll happen is we will have a nice solid trend above the 50. Okay. CVX, I'm looking for 175, 190, 214 up here as targets. CVX has turned the corner when it comes to the trend indicator. The trend indicator is now green. You can clearly see we have a trend started here. You can clearly see that. You can draw your line wherever you want. You're going to find, for the new folks that are new here, I'm not anal about putting my line on the lows or exactly where maybe it should go. Everybody should be able to just see that. You see the trend. We can put something up there if it makes you feel better. We can certainly put something up there if it helps you. Now what we're looking for is a good buy opportunity. For many people, this is a buy opportunity. For other people, they may wait till it slides a little bit to the right. We've been up 3 days. There's a trading rule out there, which rules are, you can pick and choose your rules. Doesn't mean that this is a rule for everybody. But there's something called a 3-bar rule. It's just not smart to buy a chart that's been up 3 bars. It's not that it's bad, but what happens is you're setting yourself up for a bit of a pullback. Now, if you don't care about that, that's okay. So 3 bars up, not the best time to be buying. 3 bars up, the chart you want on your watch list, because you're going to be a smart trader, and what you're going to do is wait for that thing to set up. MOS, yesterday, nice big bullish engulf following a nice little doji over here, and here we're opening up on an inside day. Notice the overall trend in the chart. Can you see how this trend could get started here? And I'm going to do this, and I'm going to avoid this low. I'm going to do something like that. That's kind of what I would be looking for. So let's watch this. Might slide a little bit. Watch the candlesticks. We might buy this based on this move up. As it moves up, never lose track. You've got a little bit of resistance over here on the left. So just follow price action. Finding charts is the easiest thing in the world. Actually deciding where and how you want to buy a chart is really the easiest thing in the world. The hard part is the management. That's the hard part. Knowing when to step away, like Fed Day, knowing when to just take it easy a little bit, So you don't normally drink beer during the day of trading. Well, maybe today's the day you do that. because you're not going to trade today, perhaps. You know, today's the day you take an extra long lunch somewhere. Hal might be setting up. We're getting a lot of these energies that's starting to look like that. You see how we have a low, a high, higher low, and a higher high? That is a beautiful, beautiful picture. There's your trend starting. Now we broke the trend here, but a new trend is starting. So now we wait for the most opportune time to buy. We're 3 bars up. This thing could slide a little bit. We're going to look for that entry up there. I prefer an entry with a green dot, but if this moves up any bit this morning, it'll turn green here. I'm looking for 39, 42, 46 as possible targets. AR is another one. I almost bought this one yesterday, almost, and look at it now moving up. Look how the chart has gone from a low to a high to a higher low. We're making a higher high. So now that we've got a low and we've got a higher low right here. So this is a low, there's the high, there's the higher low. Connect those 2 dots and let the rest of it go where it will. Now you have a trend. So the buy area now can be in this area right in there. And it could look something like this maybe. Pull back all the way to here, just simply move sideways. And by the way, there is no real big harm in buying this on bullishness today like it is now. You just have to set your stops in there and just, be cautious. We don't want it to, it's one thing if it, let's change colors here. It's one thing if we open up here and say it's bought and then say for the next couple of days it just moves sideways. That's one thing. What we really don't want is for it to move back down. So moving sideways, that actually sets up a really nice pop out of the box candle pattern. Facebook. Now I'm in Facebook. Facebook is still looking good to me. We've got this low here. We've gapped up. We've gone sideways. We popped up. Looks like we're still going sideways a little bit. First target I'm looking for is about 117.50 up here, followed by 230. Let's just see what happens up here. But I think it's still looking pretty good. AMD reported pretty good. So I think we should put that on the watch list. Personally, I would like to see it above the 50-period moving average. The reason I would like to see it above the 50-period moving average, not because the 50 is magical, although it can be, but what I'm after is I want to see the chart go up, and then I want to say, damn, I wish I was in AMD down here. I want to say that, because when I say that, now I can shop for it, because you've got a nice trend working. The trend is absolutely your best friend. And in that trend, what we're going to do is we're going to look for charts to move up like this and pull back like this and move up like this and pull back like this and move up like this and pull back like this. Once we get through that 50-period moving average, I just know the distance between here and here, you've got a nice touch of the trend a time or two. And that shows stability. That shows strength. That shows intent by the bulls. Now let's trade. And don't get me wrong. Hey, I get it. This could absolutely be a buy here, and there's a possibility I even buy it here, okay? XOM. XOM is moving up. I'm looking at 91.50, 94, 104 up here as targets. We are running into a little bit of resistance. Now it's just a matter of waiting for it to fit your conditions. If you don't like buying up against resistance, don't buy it. But I wouldn't neglect to put it on your watch list, because if it breaks out of resistance, you're going to love the chart. If it actually pulls back and give another buy signal on a pullback, you just might love the chart. SLB could be setting up here. Here we're down and see the low, the high, the higher low. We're making a higher high pre-market here. We're right at the 50 period moving average. Can you see how that just might be a bullish chart? This is a good chart to go back and just look at the green, red, turn green, red, turn green, red, turn green, red, turn green. Always pay attention when these things turn green, especially if you can make an argument with the chart pattern here. Gregor's got Oxy there. Oxy, look at that. Beautiful chart. I'm holding Oxy, by the way. I'm in Oxy. We get through this top here. Anybody see where we might get a little bit higher? Follow the trend. Trend is working. This might not be the best place to be buying it. We're pretty close to resistance up here. 3-bar rule. Maybe we wait for some consolidation. Maybe you wait for that breakout. Good traders are never in a hurry with the market. Never. Good traders never look at a chart and get in because of fear of missing out. Good traders never do that. Good traders will look at the chart, analyze it, say, you know, I like that chart, doggone it. This candle here might have been a better buy. You can maybe make an argument with these. I think that would have been the buy. But if you didn't buy it here, don't beat yourself up. Just wait for your turn. Because right now, we could do something like this. The trend is there. And notice I've extended this. How do we know that it's not going to extend? How do we know that? I used to think that. I used to look at charts like this. I would never trade a chart like that years ago because the chart, it can't go up any higher. That was a problem between my ears. I had to clean that out. When I cleaned that out, it made a huge difference in my trading because, oh yes, it can go higher than this. But because I was trained and taught pretty much off the bottoms like this, heck, chart moved up here, it could never go any higher. Years ago, that's what I would think. I only could trade here. Boy, was I missing out on a ton of money. All right, that is the trade ideas. Let's take a quick peek at the market. We're still holding in place. UVXY. UVXY, we do want to watch this. We're sitting on the 50 period moving average and the dotted deuce right here. The trend indicator green. The last thing you want if you're a bull is for this to get a little bit froggy and start moving up here. So keep an eye on that. Remember at 2 p.m. today, Mr. Powell opens up his bag of tricks and we get to hear what their plans are, which I think we already know what the plans are. I think it's the verbiage that could make a difference, okay? The verbiage. So stay sharp today. We'll see everybody back here in about 15 minutes, all right? Take care. Thanks.